Is this GameStop or is this Nvidia? HIMS and Hers Health stock has skyrocketed following their Q1 2024 earnings results. Now, there have been a slew of analyst upgrades for this stock. The question now is, has the stock climaxed? Is it a sell or is it a buy? By the way, this is an actual advertisement for HIMS and Hers Health. They're one of the few companies that can get away with this kind of advertising. And it works. So let's get into it. HIMS and Hers Health currently trades at $21.75 and has skyrocketed the last couple of weeks. Absolutely skyrocketed for a market cap of $4.6 billion. It used to be only $2 billion. And here's the 5-year chart. You see, the thing is, HIMS and Hers Health used to be a SPAC. So they got purchased by a SPAC company, went public. The stock skyrocketed on initial entry in 2021 because of the post-pandemic boom, and then cratered down to $5 a share, and just now has finally started going up again. That's what she said. Sorry. Terrible joke. Terrible joke. Okay, so let's cover the analyst upgrades. HIMS and Hers Health gave a new $22 price target at Bank of America. Okay, so there have been a slew of upgrades for HIMS and Hers Health. You can just see it right here. I just summarized it because I don't want to read these articles. Do you? So yeah, Bank of America went from $17.25 to $22 per share. Piper Sandler upped it $2 from $11 to $13. I think they'll keep upping it. That 13 is way too small for what I think is HIMS and Hers Health's potential. Canaccord initiated at $20 per share. Seaport Res PTN initiated at a buy. Citigroup went from $16 to $20. They actually downgraded from a buy to a neutral while upping the price. Yeah, analysts are weird. Imperial Capital, $16 per share, initiated at an outperform. I think they did this before the stock spiked to $21 per share, hence the outperform rating. So anyway, see, the thing is, HIMS and Hers Health is now profitable, and it's going to become significantly profitable. And I'm going to go into the reasons why shortly, but you'll see that this is a sea of analyst upgrades following just one quarter of great, fantastic earnings. The thing is, each quarter going forward, I think, as they keep beating estimates, they're going to keep going up and up and up in their in their price targets. Let's find out. Let's just move forward. Don't want to be a broken record. All right, so yeah, Wall Street rates HIMS and Hers Health a buy. 6 at a strong buy, 7 at a hold. You know what's interesting is that there's 0 buys, 0 sells, 0 strong sells. It's all hold or strong buy. It's binary. It's one or the other. I'm the strong buy camp. Let's find out. You'll see. Okay, so yeah, as you can see here, this is just a couple of months. This is actually 3 months. You can see the orange is the price target, the average price target for HIMS and Hers Health. And it just keeps increasing. And I think it will keep increasing, especially when Q2 comes in. Okay, so here's their executive team. And the reason I bring this up really is to look at their history. So you got people from Uber here, a couple people from Google. You got a Tesla employee, Nike, Walgreens, all sorts of different companies now converging on HIMS and Hers Health. And you can also see by the diverse cast of people here as well. So HIMS and Hers Health, this is from their latest quarterly presentation, is they sort of do this sort of like a TAM thing. I think it's kind of silly, but it is what it is. They list sexual health as 80 million plus estimated U.S. population that have sexual health issues. Again, they specialize in stigmatized medicine. So it's a telehealth company for stigmatized medicine. It's for people that don't want to go to their primary doctor that they've been with for 20, 30 years. They don't want to go to them because do you really want to talk about these things with somebody that you've known for 30 years? Or would you rather go online go to Hims and Hers Health, talk to some anonymous doctor there, and then get the drugs that you need. So that's their selling points. So you got sexual health, dermatology, mental health, and weight loss. Speaking of weight loss, they also recently have GLP-1. They're going to be selling those for $200 per month, which is 85% less cost. It's a generic. It's 85% less cost than the name brand. So they're significantly undercutting the name brand. So I think they're going to take a significant chunk of the market for that drug, and it is a very popular drug right now. It's actually on South Park, just recently. So anyway, I think this chart it's on their slideshow, but I think it's kind of silly too because they don't include Teladoc, but it does show them increasing market share among these 4 different companies. So in their latest report, they noted 41% subscriber growth, 46% revenue growth, and 8.4% adjusted EBITDA margin growth. These are massive numbers. And yeah, that's all I have to say. I think the numbers are going to continue to grow. Not quite at the same pace. It's going to start slowing down a little bit, but it will still grow significantly. Now, here's just a chart of the subscribers, and you can see it's going up exponentially. And then also with the revenue, you can see also on the revenue, their average monthly revenue per subscriber is remaining at $55. And you'll notice, 46%, which we discussed before. So this is where they're becoming extremely profitable. Adjusted EBITDA is $32.3 million, an increase of $12 million quarter over quarter. And the margin gain too is just insane. See, the thing is, the reason why HIMS is able to do what, say, Teladoc can't is because HIMS is specialized. They can do advertising, as I showed in the beginning of this video, that is specialized for their segments. And these product offerings, they only offer a select number of products, like 10 different medications. So they're able to stockpile these 10 medications, buy them en masse so they can get them cheap, and so they can keep their inventories in line, and just they're the only profitable telehealth company, and that's the main reason is they're focused on this target, and I think they're the only smartly run telehealth company. And yeah, as I mentioned, the only profitable one. So yeah, their long-term targets are 20 to 30% EBITDA margin and gross margin in the mid-70s. Now, the reason the stock spiked is actually the net income. You'll notice it's now a positive $11 million. The previous quarter, it was slightly positive, just above zero. Then every previous quarter before that was in the negative. Hims and Hers Health has zero debt to speak of, none whatsoever. Now, I've done a decent evaluation on Hims and Hers Health. Now, the thing is, I post these decent evaluations on my Patreon 3 weeks. I have a 3-week exclusivity on my Patreon. So you notice that the date on this was 5/10/2024. And, it's been a while since then, hasn't it? So yeah, I estimated at the time the Hims and Hers Health, their intrinsic value, I think, is $46.73. So I think they still have a 100% upside from today's price. We'll see if that comes to fruition. But yeah, as I mentioned, this has a 3-week exclusivity on Patreon. So if you want exclusivity on my other stocks or even future HIMS models, head on over to my Patreon. By the way, shout out says to like and subscribe. Thank you for watching, and I'll see you in the next one.